Hi guys, welcome to DP Stocks Learning. Today I am explaining about basics of stock market. On this topic, I have made many parts. These are the contents we are going to learn. Introduction to stock market. What is stock market? The stock market refers to the collection of markets and exchanges where the regular activities of buying, selling, and issuance of the shares publicly held companies take place. Do you know why do companies come to share market? Here is the answer. A company enters the primary market to raise funds. It is a primary market that a company gets registered to issue shares to the public and raise money. Companies generally get listed on the stock exchange through the primary market route. Now I will explain about IPO. IPO basically stands for Initial Public Offering. Is a process by which a private company can go publicly by sale of its stock to general public. It could be a new young company or a old company which decides to be a listed on the exchange and hence goes public. Companies can raise equity capital with the help of an IPO by issuing new shares to the public, or the existing shareholders can sell their shares to the public without raising any fresh capital. SCBA. SCBA stands for Application Supported by Blocked Amount. SCBA process facilitates the retail individual investors bidding at the cutoff with a single option to apply through self-certified syndicate banks in which the investors have bank accounts. SCSBs were those banks which satisfy the conditions laid by Sebi. SCSPs would accept the applications, verify the application, block the fund to the extent of bid payment amount, and upload the details in the web-based bidding system of NSE, and unblock the once basis of allotment is finalized. It will transfer the amount of allotted shares to the issuer. Application supported by blocked amount ASBA is a process developed by Indian Stock Market Regulatory SEBI for applying to IPO. In ASBA, an IPO applicant's account does not get debited until shares are allotted to them. ASBA allows the investors' money to remain within the bank till the shares are allotted after the IPO. Only then does the money transfer out of the investor's account to the company. This eliminates the need of refunds on shares not being allotted. What is SEBI? Securities and Exchange Board of India is the regulatory body of the stock market of India. It is established in 1992 under the Section 3 of SEBI Act. SEBI has power to regulate all market intermediaries and also to penalize them in case of fraudulent activities and unfair trade practices. SEBI has the authority to regulate and develop the stock market. Objectives of SEBI. SEBI to regulate the activities of the stock exchange. It will also protect the rights of investors. It will preventing the fraudulent and unfair activities. It is also develop a code of conduct for intermediates. Purpose of SEBI. The main purpose of which SEBI was set up was to keep a check on malpractices and protect the investors on interest. It was set up in order to meet the needs of three groups like insurance, investors, and intermediaries. Insurers to provide a marketplace in which they can raise capital easily, and investors to provide a protection and supply of information. Intermediaries are there to provide a competitive professional market. Do you know list of exchanges in India? NSE, the National Stock Exchange, is the leading stock exchange of India, located in Mumbai. It was established in year 1992 as the first dematerialized electronic exchange in the country. NSE was the first exchange in the country to provide a modern, fully automated, screen-based electronic trading system which offered easy trading facility to the investors and spread across the country. Second one is BSE, the Bombay Stock Exchange, in India's and Asia's oldest exchange, which began 140 years ago under the banyan tree. It was India's primary exchange till the emergence of NSE. Evolving from the open outcry system, the BSE also shifted to electronic trading mode in record 50 days. With increased connectivity, the BSE was the first Indian exchange to launch mobile trading in 2010. Despite being 140 years old, the BSE India's fastest exchange with 6 microseconds. There are few more exchanges in India which are not so active in the market. Stock exchange is a place where people buy and sell commodities. India has 8 active national stock exchanges and 21 regional stock exchanges. In this, only one, that is Kolkata, is operative. All these exchanges render the facility to trade in numerous official segments such as equity, currency, and derivatives. I want to mention about Bangalore Stock Exchange. Bangalore Stock Exchange was publicly stock exchange based in Bangalore, India, fully owned by Government of India. It was founded in 1963 and had 595 regional and non-regional companies listed. In September 2005, the BSE announced plans to go public by divesting at least 51% of its ownership. This is all about basics of stock market part 1. Remaining topics will be explained in coming videos. If you new to this YouTube channel, please don't forget to subscribe. Thank you for your support.